Kitco News, special coverage of the Decentral Miami Conference, is brought to you by Hook Finance, a revolution in DeFi asset management.
We're here with Gerber. He is a community developer at Kaddex. Welcome to the show.
Thanks so much for having me, David. Really appreciate it, man.
Thank you for being here. We had a panel, you and I, earlier, and we talked about DeFi versus CeFi. Let's start with that, and I'd like to talk about DAOs a little bit. Not a topic we talk a lot about on the show, so I'm excited to get your insights. Traditional finance as we know it, is it going to evolve? Is it going to die? Or is it going to stay the same?
Traditional finance is going to adapt. We'll never see the absolute end of it, and I don't think we necessarily should. It's a necessary backbone for most of the world, but DeFi is arguably more important because of what it can do for the common person. Like, I work in DeFi because I want more people to sort of rise up in the world and come together and be a part of something greater than themselves, and DeFi enables that. Whereas centralized banking and central authorities sort of prevent, or not prevent that from happening, but don't actively champion that, message. So one thing that I'm very into right now is DAOs, or not right now, but just overall. The idea that people collectively come together to work on something greater than themselves. They're intrinsically motivated by what they're doing, and they just believe in it. And they're willing to leave their day job to be a contributor and receive compensation and rewards and see a product grow. And they can enter and exit these systems at will. And what that enables is an entirely new way of looking at how we approach work. Like, onboarding and offboarding from a current job or like a traditional job is a hyper complex process. Like, there's all the applications, there's paperwork, there's all this stuff that you have to deal with. So what we're really trying to do at Kaddex right now with our DAO is enable a system that allows the community to decide how someone, or how well or poorly somebody is contributing to the system. And so it takes into account a social reputation score that's not determined by a central body, but by the community at large. And so in our Discord, which is what we're going to be using for governance, in conjunction with Commonwealth, some alpha right there.
Almost got me.
We're basically going to be running our DAO from Discord and creating the social trust system that will enable all users to vote on how someone is contributing or not.
Grant, let's back up. We're going to talk about DAOs in more detail and explain that to the audience. First of all, we're talking about DeFi versus CeFi, traditional finance versus centralized finance. What are the major differences?
Okay, so
when we talk about traditional finance, what is that? And then we talk about DeFi, what is that?
Traditional finance is a bank, like TD Bank or whatever. You give them your money, they hold it, they use your funds to basically invest in their investment arm or whatever, and then you as an individual really have no say over that, over how your money is contributed or spent or what, unless you go to a specific money manager, asset manager, and deal with that from there.
Well, you can choose the funds you buy, right?
Sure. Yes, but if you're just depositing your money into a bank or depositing into a system, you really don't have a say there. Okay. Kind of as a shareholder, if you wanted to get very granular with it, but most people don't follow that approach. Okay. So in DeFi and in DAOs, what you can do is when you contribute your money to a system, you can have a direct say in how that system functions.
A DAO is a decentralized autonomous organization. Yes. What does that mean?
So,
in layman terms,
sort of what I was, let's say we want to form a bank. Yeah. Us and these people over here want to form a bank. Yeah. And we say, all right, let's all pool money together and create a system and then manage that system. And then you do marketing. And you do marketing for the bank and receive compensation based on an asset that's produced by the bank. Okay. I do sales or something. These people do back-end or front-end development. And we all contribute to the system collectively. And we don't go into it with this expectation that we're going to be signing paperwork and treating it as a traditional job, but that we're just contributing to it because we believe in what we're doing and want to see it succeed.
Well, how is that different from just that sounds like a bank startup to me.
Sure.
How is that different from a traditional bank, the structure-wise?
Well, if you're doing it in DeFi, there's, the way you can approach it is non-traditional. So it also that would be saying like we're doing it privately. But let's say we open it to the public and we say anyone who wants to come in and contribute to this system and work in our startup or our DAO can do so. And we don't gate it based on like someone's qualifications. We attract people based on like what they want to do.
Yeah. So let's provide a real example then. Let's say a project, a crypto project, is governed by a DAO. What does that mean for that project? Does that mean every stakeholder has equal say in where that project is headed?
Not necessarily equal say, but a say proportional to, like, so what we're doing at Kaddex, for example. We're taking KDX, which is our native token, our governance token, and requiring users to actually stake it to have voting power. And so a result of that is that when you initially stake, your voting power increases very quickly and then slowly continues to accrue after about 2 to 3 months. So at 24 months, you'll have like a 2.5x voting multiplier. And that's reasonable because you've kept your KDX staked within the system for 2 years. You should have a strong say in how the protocol is governed. But at the same time, because of how quickly voting power accrues, someone new who's entering the system is still going to have a voice. And so if I stake 100 KDX, after 2 years, it would be 250 KDX. It's just sort of how the math works. But at 0 to 3 months, it would like accrue like my 100 KDX would count as like 10 KDX, then 50 KDX, then 100 KDX or something like that. So it's a more democratic system in that it ensures that people who stay staked and are financially and intrinsically motivated by the system itself have a say in how that system functions. And the Kaddex DAO will have control over like all LP parameters on different pools. So if there's like a Bitcoin ETH pair on Kaddex, like when the bridges occur and both of those assets are bridged over, the DAO can effectively and collectively decide like what the parameters on that pool are, like what the fee structure looks like, what the burn rate on KDX is, what the like accrual rate is as well. And then also, when you're staked in that system, you're earning 5 bips on every swap for the entire network. So if there's $1 million in trading volume per day, that's what? 5 bips is $5,000-ish dollars distributed to all stakers in the system. $1 million is, of course, very low for Kaddex.
Okay. So the higher the stake, the more voting rights you have, basically.
Essentially, but it's still a metric of how long you've staked for.
Right. Now let's talk about what you said earlier, which is how DAOs help everybody have a fighting chance in finance. What do you mean by that?
So anyone can enter the Kaddex DAO and begin contributing. My background myself, I was a stage manager at a nightclub. I ran a club in San Francisco. I had an amazing time, and then COVID happened, and you can't really run a nightclub during COVID. So
you can in the metaverse.
You can in the metaverse. This is true. Yes.
Metaverse nightclub.
Metaverse
Maybe that's
nightclubs.
your new project.
That could be pretty sick.
Well, but anyway, continue your story.
But what sort of entering DAOs enabled me to do was to take my skill set as like a very community-oriented person and working with a diverse group of individuals and getting them, like corralling them all to work together and ensuring that they were all like doing their part. I brought that over to DeFi, like my skill set, in managing DAOs. So I've helped out with other DAOs like Fei Protocol, Olympus, and a few more. But one thing I always saw was that the people with the most money always decided how the project was run, even if those people didn't necessarily have the best interests of the protocol at heart.
So that's just called capitalism.
It is capitalism, but it's a part of capitalism we can solve in DeFi because it's not necessarily to anyone's interest. If you, as a stakeholder, like strongly believe in a project and you want to see that project succeed, but you don't have a lot of money, but you're still a good contributor and you're writing code and pushing content, like you should have a strong say in how that project succeeds. Whereas if someone comes in with $5 million, buys a bunch of governance tokens, that's a huge amount of money. That's a huge amount of voting power that they have to influence how a protocol works. And there's so many people in crypto and in DeFi who don't necessarily like truly care. They see dollar signs and that's what they want. They want quick short-term gains. So this voting system we have doesn't prioritize short-term gains, but prioritizes long-term health of Kaddex. Because I'm in this to see DeFi grow and evolve into something truly beautiful and to truly create a more like democratic sense of finance that anyone can access, anyone can be a part of, and anyone can use. So that's sort of where we're at with Kaddex.
And I brought this up in the panel. The issue with DeFi and at large right now is that to progress to that stage where everybody benefits and we have equal say in finances, we need cryptocurrencies to become actually currencies, right? Right now, there are not a lot of applications for cryptos to be used in everyday life if you were to buy something. Can that happen?
Yeah, of course. I mean, we're seeing more, obviously, like if you look at Venmo or something, for example, or PayPal. PayPal, I believe, settles USDC on Ethereum. So we can see these remittance type payment systems, which is what's used in a lot of Africa as well, where it's like you are your own bank. And DeFi makes you your own bank. So at some point, like if we go to this entire peer-to-peer economy, we don't even need to necessarily interact with banks per se, but we can, like, if you performed a service for me or I performed a service for you, I can simply just send you crypto. And we could get to a point eventually where like POS systems at stores just, you know, natively accept crypto.
Well, the cryptos have to be stored on some sort of wallet or exchange. Won't those be the banks?
But they're decentralized. So you as an individual, like if you have MetaMask, for example, and you hold like some ETH or the upcoming Kaddex wallet that we're releasing, I think next week, alpha again. Like I would just be able to send you money through the Kaddex wallet to your Kaddex wallet for basically no gas with a 15-second transaction time.
Well, I got to ask then, if there's no gas, how does Kaddex generate revenue?
So there is gas. However, we pay the gas cost of users because of how cheap gas is. So we deploy gas station contracts that we can load with KDA and basically execute swaps for users. And because of how cheap gas is on Kadena, because of the fact that it infinitely scales, we can ensure that that system is always taking place.
Yeah. Well, how would you solve the problem of higher gas fees when more users are on that network?
So what Kadena does, which is very cool, Kadena is a multi-chain system. Kadena operates on currently 20 chains. Each chain runs at about 15 TPS. And those chains all confirm off of each other via chain web. And instead of basically doing a hop from each chain, like 1, 2, 3, 4, it would go like 1, 2, 4, 5, 6, 7, and then all the chains confirm off of each other. So it works to solve the degree diameter problem of a multi-chain system. And more chains can always be added into the system. So you never have to worry about network congestion because you can always choose which chain you want to operate on and basically determine like from there exactly like how fast or slow or whatever you want your transactions to do.
Another problem that we talked about during our panel was a problem of UX not being very user-friendly. I think we can all agree that MetaMask is harder to use than Venmo or Robinhood. Sure. So, I mean, why is the community not working on that problem right now?
There's still a disconnect. Sort of what I was saying on the panel is that engineers, builders, and users, there's a divide. We're all working on what we feel should be the best route forward in terms of developments, but we're all so caught up in it that we can forget that, you know, not everyone is like incredibly well versed in how all this functions. So it's what I've been doing is really taking a step back, like spending more time with my community and understanding exactly like what they want to see and what their ideal experience would be when onboarding to Kadena and to Kaddex. Because it's really just all about talking to people and understanding like exactly what people want and working with them to bring them what they want and aggregating all of that data and forming decisions.
What are some user feedbacks that you've gotten so far?
So Kadena is not necessarily the most user-friendly ecosystem. Showing users like exactly how to connect their wallets to Kaddex has been one point of feedback for us, and that's why we're building our own wallet that will just natively interact. It's a browser extension. It'll just natively interact with Kaddex and do cross-chain swaps for you. But another thing we've seen is like this issue of people not understanding like what their seed phrase actually is or what their private key is. And people will give away their private keys. Never give away a private key. It doesn't matter who asks you. Don't do it.
Why
Don't
not?
give away a seed phrase.
My mother
they
wants
have
my
your
private
money.
key.
They have your money. Don't give it away. Doesn't matter who asks.
Okay, you heard it from Grant. I mean, that's all right. Well, that's common sense, but I guess people still do it.
People still do it, and so that's like we recognize that we know it's common sense to not do these things, but there's still people out there who are new to the space and aren't necessarily technically savvy. And so educating those people and developing systems to teach those people why doing that is bad is really important.
Just off topic, quantum computers supposedly in 10 years can break public and private keys anyway, so it's not that I don't want to tell somebody, it's that the computers will figure it out anyway.
Well, you have 10 years to cash out then.
All right, let's move on to the cryptocurrency market.
Sure.
I know you don't give investment advice, but I've been hearing this from a lot of people that we're at the top, everything's about to crash. They don't feel great right now. Are you feeling that sentiment?
Bears are vocal, man. Bears are always going to be some of the loudest people in the room. No one can truly predict crypto markets. They're inherently more volatile. It's hard to say, really. I think that DeFi is at a stage right now that's ready to take off. I'm seeing a lot of like promising new projects come up. I'm seeing a lot of amazing partnerships happen, and I'm seeing more.
And I think that's one of the major risks of DeFi. Is not that you want to help people, but you're investing across these different projects that might lose all their value over time, and that's always a risk, like you said. So the lack of stability inherent in DeFi is a problem.
I mean, at the same time, like if you look at fiat, for example, and how the US dollar functions, like what's that really backed by? It's simply faith. So if we're talking about volatility, inflation, or financial stability, like we need to consider all asset classes. And the US dollar, what's inflation at right now? Like 15-ish%? They changed the calculation.
Yeah, they did. Well, some would say it's double digits off the records, but officially it's 6.2%.
Okay.
It's the highest since the 90s.
So why put money back into USD? If you're going to hold your money, it basically is...
So I'm guessing you're not a fan of stablecoins then? USD?
No.
USDC?
I don't really like Tether. Tether is like Schrodinger's stablecoin, where if you look at you don't know if their backing is a lot or a little until you actually look at the accounting, and no one's really seen that.
Yeah, there's some problems with Tether I've read.
Yeah. But a lot of algo stables like Fei or Frax, DAI are really strong projects. And like Fei and Frax specifically for me, I believe very strongly in. These are coins that are designed to inherently control their own value algorithmically, which is something very necessary in DeFi. Because if we can get away from like a dollar quote unquote peg to like a Fei peg across all of DeFi, that'll be incredible. We don't necessarily need to correlate like our continued finance with the US dollar.
Final question, I'll let you go. What does the community need to do, or what needs to happen before, let's say, 1 billion people adopt DeFi around the world? In other words, why is it not happening already?
I think there's still a level of fear. People are uncertain about DeFi, people are uncertain about crypto. It's a highly technical topic that not everyone has time to fully understand or wants to fully understand. They're okay with their USD or their euros or their pounds or their LOC or whatever. And they're okay just knowing that money is worth that money. But as more states start to adopt crypto, that's when we'll start to see more adoption. Like El Salvador, for example, is using Bitcoin as their currency. It's incredible. I have my own thoughts on Bitcoin, but aside from that, it's amazing to see instant adoption like that. And so as adoption comes from the state level, that obviously will come down to the citizens and the people of that state.
Right. And you educated yourself, obviously, because you came from a community-oriented background, you worked in the service industry, and now you're very knowledgeable. So for those watching right now who want to learn more about the DeFi space, what would you suggest in terms of education?
if you have a few hours a day to read and just spend time reading blogs, spend time in DAOs, think of like what project you're interested in. If it's like a lending platform, check out Rari. If it's a stablecoin, check out Fei. If it's a DEX, check out Kaddex.
Another alpha there.
But just think to yourself, like, what do you want to do in crypto, and how do you want to participate in this world? And just go down a Google rabbit hole, you know? Just spend time looking it up and learning. Watch YouTube tutorials. There's also amazing, some college courses out there. I took a course at Duke on blockchain that was phenomenal. Really, really educational, like
Well, the fact that
stuff.
higher education is offering courses on blockchain kind of speaks to the future of the industry.
I do. I mean, well, yeah. So Duke has actually developed like a whole fintech program now with like a cryptocurrency focus, which is amazing. And so now you can literally get a major in blockchain or a graduate degree in blockchain, which is super cool. But at the same time, like a higher education doesn't necessarily mean, you know, anything. Like I went to school for audio engineering and I took one course and now I'm working full time in blockchain. So it's really about how you choose to spend your time. If you want to learn this technology, learn how it works, learn all of the underlying mechanics, the world is your oyster. Like YouTube is the fucking modern day Library of Alexandria. Like you can find anything you want on there. So just go out and learn.
Good talk, Grant.
Thank you so much
I appreciate
for
you coming
having
on the
me.
show.
Appreciate it, man.
Thank you for watching Kitco News. Stay tuned. Grant and Gerber.
Kitco News, special coverage of the Decentral Miami Conference, is brought to you by Cook Finance, a revolution in DeFi asset management.